How did Warren Buffett get to be one of the richest people in the world? How do you get to be so wealthy without starting a business and just investing in businesses that already exist primarily? Well, he uses one trick that allows Berkshire Hathaway to invest $164 billion basically for free. This is what he's used to buy companies like Coca-Cola and American Express. It is really a huge key to Berkshire Hathaway's outperformance of the market over decades of time. So I want to get into exactly what this trick is, how he's using what's called float to generate massive returns for investors. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. Go to fool.com/ASYM for their top 10 stocks to buy right now. So what a lot of people don't know is that Berkshire Hathaway, Warren Buffett's company, is one of the biggest insurance companies in the world. And what this means is that Berkshire Hathaway takes in money in the form of premiums and then pays them out when something happens, when there's some sort of insurance claim, whether that's for autos or property or life insurance. There's all kinds of businesses that Berkshire Hathaway are involved in. But between that point that money comes in and money goes out, Berkshire Hathaway is actually able to invest that money and make a profit and actually keep that profit. That is what's called float. And this is really the key to Buffett's success over the last 30 or 40 years. So I'm going to get into the exact details in Buffett's own words. This is Berkshire Hathaway's 2019 shareholder letter. So this came out in the spring of 2010, and it explains Buffett's insurance business and the float that comes along with it, I think, better than I've seen in any other place. I've highlighted the important things here. Insurers receive premiums up front to pay claims later. In extreme cases, such as those arising from workers' compensation, payments can stretch over decades. This is one of the reasons that Buffett is actually involved in things like asbestos claims. Those claims may take decades to pay off. So this collect now, pay later model leaves us large sums of money that we call float that will eventually get paid out to others. So this money is not Berkshire Hathaway's to keep. But it is Berkshire Hathaway's to invest, and they get to invest that money to the benefit of Berkshire. So as he goes on to say here, there's actually two pieces of the insurance business. There's the profit on underwriting insurance. So basically, do you charge enough for the claims that are going out the door? That's the first piece of insurance. But the second is the investment income that is produced by the float. And this is really where Berkshire Hathaway and Warren Buffett have made a vast majority of their money. And this is, remember, this is 2019. They have the largest insurance operation in the world. And the float has grown from $16 million in 1967 to $62 billion at the end of 2009. Now, where does that sit today? Well, it has gotten even bigger. This is the most recent shareholder letter. We'll get another letter in spring 2024 for the 2023 fiscal year. But in this letter, which came out last spring, you can see that the float increased from $147 billion to $167 billion just in 2022. And that means that the float has increased 8,000-fold. So the amount of money that Berkshire Hathaway gets to invest from just that float has grown 8,000x up to $164 billion. Now, here's the other key thing. This is not recognized in the financial statements, this float, because it isn't an asset that Berkshire Hathaway owns itself, but it does get to keep the profit from those investments. So this is really a key to Warren Buffett and Berkshire's success over a very long period of time. Not only the fact that they've invested this float and done very well with it, but also the fact that the float has grown so much over time. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So where is this float money being invested today? How is Warren Buffett continue to beat the market by investing this money that isn't really his? Well, look at these holdings. You can see that over half of Berkshire's stock portfolio is in Apple stock. Now just think about how well Apple stock has done since 2016 when Berkshire started to take a big position. This is a look at Berkshire's additions and stake in Apple over time. And you can see that the percentage of the company's portfolio that has been in Apple has been just growing at a tremendous rate, been over 40% since mid-2020. Some of the other major holdings have actually been stocks that Buffett has held for decades. American Express, Coca-Cola. These are companies that Buffett was building positions in in the 1990s. And now they're generating enough just in dividends to just keep them in the portfolio and allow them to keep churning out cash. Some of the newer investments in Buffett's stock portfolio have actually been on the energy side. Occidental Petroleum, Chevron, these are companies that he's been adding to, I think in large part because they become just cash flow machines. This is not necessarily where growth is in energy, but Buffett, remember, is one of the biggest utility owners in the US. So he's seeing where demand is from a utility side. And not only is there plenty of demand for oil and natural gas, there's not nearly as much investment going into those legacy fossil fuel assets as there is in some of the new generation assets. So it's a cash flow business, and that's something that Buffett absolutely loves. So I think it's fascinating to look at the mechanics of how Berkshire Hathaway and Warren Buffett have really built this company over time. He learned early on in the 1960s that you could simply buy insurance companies and then invest that float. And if you're a phenomenal investor like he is, and you can make a little bit more money than just the average investor or the average other insurance company, you can start to outperform your market. You can use that extra cash that's generated by the float to buy other companies and continue to grow the insurance business and continue to invest that growing level of float, now over $160 billion. This is just something they've been doing continually year after year after year. And it's also very different than a lot of other insurance companies. A lot of other insurance companies are going to be much more risk averse. And they're going to say, hey, this float, yes, we get to invest it, but we're going to take as little risk as possible. We're going to buy treasuries. We're going to buy corporate bonds. We want to have predictable cash flows. So in a lot of ways, Buffett was taking a lot more risk than a lot of his competitors by investing this float money in the stock market rather than in the debt markets. And I think that's really one of the takeaways from the outperformance of Berkshire Hathaway over a long period of time. Not only is Buffett a phenomenal investor, but he's actually used leverage through these insurance companies and through this float in a way that a lot of investors couldn't. Now, as the company gets bigger and bigger, what he buys has to get bigger and bigger as well. That's why you see major stakes in major companies like Apple, Bank of America, American Express. These are huge companies, much more predictable cash flows than you may have had from the kind of stocks that he was investing in the 60s or 70s. And so this is why the outperformance for Berkshire may not be what it was in the past, but the formula is there, and it continues to be the exact same for Berkshire Hathaway that it's been since the 60s. So fascinating look back on one of the keys to Warren Buffett's success, how he became one of the richest people in the world using the insurance business and the free money that comes along with it to invest in the stock market to drive financial returns for Berkshire Hathaway. What do you think about using this float and how Buffett has made money over time? Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.